Yeah, hi. So we're going to look at US 30. So if you can see, I want us to start from the point it took out this low here. It consolidated, then it started rallying up, right? But if you can look up, these lines that I've put, the horizontal rays, there's a fair value gap here. So because of the price imbalance. So price found support and it broke down. We created this swing low here. Then it went back up and took out the people who sold it early, took out buy side liquidity. Then it broke down and took out the swing low, right? Then what did it create after breaking the swing low on a daily chart? It created another fair value gap in here and it filled it, isn't it? So it sold again. It sold and it's cleared this low now. So Friday session, you can see it was very bullish, but I'm not very sure where it's going to go from here. What I can say is you need to know high time frame premium and discount rates, but we're going to focus on fair value gaps and other blocks and breakers. Yeah, so it created another fair value gap here, if you can see where I put this, right? So going into next week, we expect price to reach this level. So we can look for buys. So let me go to a 1 hour time frame. Okay. I'm using US 30 because if you can see, ICT doesn't use this for teaching purposes, doesn't like it, but it's just the same thing. Yeah, so on Friday, you can see that it retraced and it entered what? This is a swing high over here. A swing high, then created a displacement. Then it came back into the fair value gap here. So after it reached the fair value gap, let's analyze now this price action here. We analyze it on a 15 minute. So 15 minute, um, it came back into the fair value gap, then it started going up, isn't it? So we can say it took out this low and this one, right? So now you look for a swing high. There's a swing high right here. This is a swing high. But when it broke, it didn't create an imbalance. That's why you can't use a fair value gap here. But then uh, if you go say to a 5 minute chart, it's probably going to show one imbalance that it tried to fill. There was actually one here. Yes, there was this imbalance, but it didn't come back because it was rushing to take out liquidity. So it comes back down and starts buying again. But if you can see here, the fair value gap, there's this candle, this one, and this one, right? Then it comes back down, you enter in the fair value gap. Stop loss has to be below this candlestick over here. Yes. Then your profit target should be on highs. So if you go to a 1 hour chart, you'll be able to see this was going to be the profit target here and here. Okay. Yeah. So I'm go back to the 5 minute chart. Yeah. So it came back down into this fair value gap it came back down into this fair value gap here, and then it went up. Then it started going up and up and up, right? But this one only gave one opportunity. If we go to NASDAQ, you see how many opportunities it gave to actually enter. Yeah, so I want to teach you what a breaker is. Okay, so a breaker, a bearish breaker, in this sense, I'll teach you because it actually formed. A bearish breaker is formed when a high is formed and then another higher high is formed after taking buy side. So the breaker is the last down close candle, this one, before the up move to take away buy side. So it forms this leg, then the second leg, which is higher. Okay. Then now, after breaking structure, comes back, fair value gap plus breaker. That's higher probability. You can enter here. Stop loss above there. But that's now when you've got a lot of money, you can trade the daily chart. So now, for this chart, I guess we're done. I wouldn't want to go really further. Then now, let's look at NASDAQ. Continuous. Yeah, I'll use this one. Yes. Okay. So if you can see, after NASDAQ actually took out this low here, it started consolidating as well, right? And then it started buying. This buying action, I remember we did an example of this. It came up and there's the fair value gap right here. You can see that? Fair value gap. It acted as support. Broke down, came back up, but this one didn't form a breaker because breaker, that means this was supposed to clear this high. Okay, a higher leg up. Yeah, so it's supposed to go like that, then down. Then that's a breaker. So after breaking, you can see fair value gap, right? Acted as support, then it broke down again. So now I want to show you something, because these assets, they move practically just the same. Practically S&P, NASDAQ, and Dow, but especially S&P and NASDAQ, but they're just practically moving the same way. So your eyes have to see these imbalances, fair value gaps, breakers. Yeah. So now it broke this low, right? So low is broken. Okay. This is Friday's price action, is Thursday. Yeah. So after the low is broken, what you need to understand is after liquidity is taken, this is external range liquidity. It always goes back for internal range. So after external is taken, internal. External is just an old low and old high. So it has to take this high out to probably trace back. You get. So now it's going for internal range liquidity, which is now fair value gap order block breaker. Okay. So this asset class, we're expecting it to get into this fair value gap. So Monday, we expect it to get into here, or Tuesday, right? I don't know the exact day, but next week it's going to enter this fair value gap for sure. It's going to buy. So now I want us to go to our 1 hour chart. All right. So on a 1 hour chart, you can see it's almost reaching for this fair value gap. And it created an order block. After coming into this fair value gap, clearing these lows that were created on Thursday in the night, it cleared the lows, got into the fair value gap, then it rallied. It broke this high. What do you expect if this is the order block? If this last down close candle is an order block, right? And it breaks this high, you expect price to come back down, return to the order block, and go up. So now go to our 15-minute chart. Needs to be more clear. So it hits the order block, right? These down close candles, hits the order block and starts rallying. Okay. Now I want us to look for opportunities to enter. So if you can see, it's not very clear right now, but if you can see, there's this candle, this one, and this one. So after it hits the order block, this red line, it forms a gap. There was a gap between this one and this one. So it comes back down. That's the chance to enter. Comes back down in here, fair value gap, that's your time to enter. And also, yeah, those were the best opportunities to enter. Once it hits the order block, you start looking for your opportunities in small time frames, 15 minutes going down. Yeah, so practically, that's what I wanted to show you. Nothing complicated. Yeah, you can see there's also another fair value gap here. It will probably reach for, I don't know when. I don't know when it will reach for that. Yeah, but it always does the same thing. External range broke, taken out, goes forward, internal range, fair value gap, boom, breaks. It's the same thing. It always happens, bro. Yeah, so I don't wanna actually say too much. I think that's enough for this session. I hope you liked it, and we shall meet next time.